This is a bank. Inside the bank, which is, I guess, the middleman, you got money.
Yeah.
So could you explain it to me through the context of this, we'll call it the central bank, how the system currently works as it relates to transactions, the public ledger, etc.?
In the old world, we both had our gold.
Yeah.
And we'd stick it in our safe or bury it in the ground. That gold was your gold. This was my gold, and I might try and fight you for it. And then we invent banks. Mm-hmm. We put it in there, and they give you a note to say, Stephen, you've got one of those coins, and now we trust this bank to give us our coins when we want them, because they're our coins. Safe as a bank, as people would say. The issue is, what's known as fractional reserve banking, they have taken those coins and given them to somebody else. They've lent it for money. So now that coin is not in there. If everybody pulls all the money out, there's not enough money. It's called a bank run. So it's not your money because you don't actually own your money. The moment you put it in the bank, what you've become is in fact a debtor to the bank, or a creditor to the bank. So you've lent them money.
But I've got a piece of paper.
Yeah, means shit. You don't own anything. 2008 proved another thing, is that nobody owns anything. The whole system itself is leveraged. Back in that time, the average US government bond, which is the safest thing in the world, was leveraged up to 30 times. 30 people thought that that was theirs.
But there was actually only one coin in the bank.
Yeah.
But they made 30 pieces of paper.
And that's all well and good if the thing that it's secured on,
the coin,
maintains value.
Okay.
Or isn't pulled by one person. If you were the lender and you're original lender and you get it out and something happens, then all of these 29 other people are like, I want my coin back. It doesn't exist.
It doesn't exist. So we just created the coin.
Correct.
We just gave you a piece of paper, but there was no coin backing it.
But that's one issue with the banking. The other issue is pretty much everything we do is created on this. It's called a ledger system. It's actually a philosophical, mathematical problem that has been unsolvable until Bitcoin came along.
Okay, so let's throw away the bank. I'll take my paper back because that's worth 0. This is our hypothetical blockchain.
Yeah.
Now, explain to me the difference between the bank we just saw and this blockchain.
Let's say it's a Bitcoin.
Mm-hmm.
This slot on the blockchain is confirmed by every other part of the blockchain, which is all the computers that solve this mathematical problem. So if I transfer this ownership to you,
yeah,
it will know that you are the owner. You can either hold it yourself, like the gold coin, or you can ask somebody to custody it for you, but still your name.
Mm-hmm.
So now what you've created is what a friend of mine calls the security truth machine. So at first, we all know it for Bitcoin. I can own a Bitcoin. It's proven that I own the Bitcoin. I don't need anybody to tell me that I own the Bitcoin because it's publicly acknowledgeable and verifiable on the blockchain. It's immutable, which means can't be broken.
There's a contract in here.
Yes.
It says, I've sent 1 Bitcoin to Raoul.
Okay. So this is the world pre-Ethereum.
Okay.
The world post-Ethereum would say, I'm going to send Raoul 1 Bitcoin if the sun shines 13 days in a row in London and something else happens, whatever it is. And it will automatically settle, verified, on the chain.
Because there's 10,000 computers.
And there's code in that to make the settlement. What it means is that everything we do as humans is actually contracts. Me turning up here today, a contract. Literally everything we do is a contract. Every ticket you buy, every purchase you make, everything is a contract. It's how society functions.
Money's a contract, isn't it?
Money's a contract. Now, what we can start doing is using this very powerful chain and putting other stuff on it. The first random thing that came on it was actually art, because it's valuable, called NFTs, non-fungible tokens. They're single pieces of art that were stored there, and we can have ownership. This has solved another big thing that didn't exist. What we've created is digital scarcity. You can only create a certain amount. We can make that one asset be that one asset. It can't be replicated at all. And scarcity is what gives value. It's what humans assign value to.
If I send you one Bitcoin, if I do something on this database, it is in accordance with the history of the database, and it is in line with that database.
To make it less complicated, it just makes it a source of truth. That as a technology solves many things, problems that we don't even know we've got because they're so part of how we exist. So the technology is not about money. The technology is about truth and exchanging value and creating value in a digital age. We've seen technologies similar before, the internet. We've seen broadband. We've seen these big global infrastructure things. We didn't get to make money out of these things. Amazon made the money, or whoever it was building the broadband. They all went bust as well. What we've got here is this very clever thing that everybody in this blockchain gets rewarded for the role that they play. And because these things are scarce, and let's say Bitcoin being the most classic example, there's only 21 million that will ever exist. You've created this scarce asset that is a reward system. The people who mine the Bitcoin, they use the electricity to solve the algorithm to get the Bitcoins to make sure there's only 21 million. Well, they get rewarded. The people who verify the chain get rewarded. We can buy the asset, which is actually us investing in the future use cases of this thing. It is fractionalizable. So a Bitcoin, you don't have to buy one at 60 whatever thousand it is today. You can buy a fraction. None of us can buy the $50 million apartment in Manhattan and then do it up and flip it for 250 million. Now, blockchain, we can all put 10% of our paycheck in it.
Do you think people should?
Yeah, and more. But the point being is this is the only globally homogeneous asset on Earth. It's the same in Nigeria as it is in Brazil, as it is in London, as it is in Silicon Valley, as it is in India, as it is in Papua New Guinea. And everybody is on an equal footing. You can put the same percentage of your worth in it. It bypasses the banking system, the brokerage system, and all the other incumbent things that get in the way of a Nigerian buying an international investment. So we've got a playing field that's leveled in the fastest growing technology of all time, in the fastest appreciating asset in price terms of all time, in the shortest period of time, that is globally available to anybody. Now, why that's important is because having more investors in it means the asset becomes more valuable, which means you're more likely to secure it. People want to join the network to earn some of these tokens. The more use cases get built upon it because people are making money, and it bootstraps it. It's behavioral economics. It's an incentive-based system to bootstrap the most ridiculous startup idea of all time, which is I'm going to entirely disrupt money and create a new internet. I mean, that's laughably stupid, and that's what's happening.